trust your crypto assets to centralized exchanges that actively sell your private information and front-run your trades? Would you like to buy and sell your assets without any middlemen, intermediaries, or robots? Do you like paying slippage, fees, and having the price go up as bots steal from you on low-liquidity decentralized exchanges? The solution is nodemarket.io. Set your guaranteed buy or sell price. No middlemen, no slippage, no bots, ever. Buy or sell 1, 10, or even 10 million tokens, and you never have to worry. OTC trades are between you and the seller or buyer, guaranteed by audited smart contracts and no human middlemen. Nodemarket.io. Do you trust your crypto assets to centralized exchanges that actively sell?
Whoa, we didn't pay him for a second ad.
He wants to get paid double today.
That guy wants that money. He wants that money, though. Brandon.
Good.
What's so good about it?
I don't know. CPI data was good. Then everything sells off. Good. Normal.
Yeah.
Normal stuff.
And it still hasn't been adjusted for owner's equivalent rent. That's still really high, and that's still creating a lot of weirdness. It's funny, just a couple days ago, Jerome was like, the economy is strong, employment is strong, and they are looking at the numbers, and he is just lying through his fucking teeth. But here's how you can tell, because he no longer has conviction. He used to be like gregarious and like move his body. Well, a little bit. He's not like a disco guy, but he would move a little bit. Now, the economy is strong and resilient. There is a variant lag in the information. We are data dependent. And he's just reading off a teleprompter or note cards, and he's not in it. And then he's not in it because now even some of the other Fed governors are starting to go, man, I don't know, bro. So it'll be interesting to see how they then go back here in the next month or two and say, oh, well, what we said a month ago was mostly bullshit, but here's why we said the bullshit. But really, this is the new bullshit to cover up our old bullshit. And we're going to cut rates. So the whole world's cutting. Fed will be cutting too. All right. Do we got any office-y stuff?
Yeah, I mean, for the most part, it's still the same old. You guys got to remember what network you're on when you're over on Node Market. Just go check it. Just check it, please, before you email me. Just check it. Now that we've introduced base, apparently that just put a mind warp in everybody's minds, I guess. So it's like, whew. So if you're on like Node Market and your licenses aren't showing up, most likely your wallet's on the base network. And then just make sure your wallet's connected to the same browser that you're using. I see a lot of people like send me screenshots like, no, I'm connected, but they're like connected in a different browser. Like their wallet's connected in Brave and they have Chrome open and they're like, well, why isn't it connecting? You got to be in the same browser. Anyway. And then also, Ken, it looks like you got to email me because it looks like your subscription may be up. And if we're wrong, let me know. So I don't know why you come to the general chat to ask questions, but email me. So anyway, we're good. But besides that, I think as far as Node Market goes, nothing fundamental, like everything's working good. So if you're having issues, you can email me, but just check your network, check what network you're on. If you're on base, you won't be able to see ETH assets. If you're on ETH, you won't be able to see your base assets. So easy peasy. You could refresh the page and stuff and just restart the computer, all that kind of stuff. And then, if something's not working, then something's not connected correctly, but everything's good. Also, as far as, let's see, I think licenses are all listed here. Yeah. Okay, so we have license. There was a couple people asking about some 128s. We got those listed. Anyway, we should be good to go on all that front, but yeah, a lot going on. The markets, and we'll talk about this obviously when we get to markets. The markets suck, so that is gonna like ripple effect through everything that we're doing as well, and it's brutal out there. It's really brutal. Even though CPI data came in super good, I just don't see the markets reacting there. I mean, they reacted up, but right now, I mean, you can see CPI data. What happened there is it was really good. Obviously, inflation's lower than expected, but everything bounced up this morning because everybody's super excited. Then everything just sold off with the Nasdaq. So right now, the crypto market's just following the Nasdaq step for step. So I don't think we're going to see any difference in that anytime soon, which is very unfortunate here. So. Let's see if we have any other questions really quickly before. Let me look up through here. Portfolio had a green day, yes. Yeah, typically. Oh, I'll show this chart actually, because I did share this in the private chat. Let me share this. Boom, boom, boom. I don't know if you guys have seen this, but typically Wednesday's the best day of the week. Tuesdays are green. Mondays are really, really bad. So because Mondays are bad, and you know the way the math works, right? Here's a simple thing too, the way the math works on crypto. We'll go over that. But Thursdays are bad, Fridays are typically good, then Saturday, Sundays suck. So if you drop in crypto, if you drop 20%, how much do you have to rise to be back at the same point? So if you're sitting there and you drop 20%, how much do you have to rise to be back at the same point? You have to double. You have to actually double the drop. So you have to rise 40%. So even though everything's down or whatever, 70%, now we have to go up 140% to get back where we were, that's the math of crypto. Yeah, that's the math of crypto. And it's rough for people to take. So even though we've had literally, oh my gosh, 90 days of absolute crappiness in the market, we're down in a hole, right? So it's going to take some. So even if we have one good day yesterday and 6 bad days, that's not going to cut it.
It's not directly twice the loss, but that's a good way to think about it, especially if you're building your portfolio. So like the easy math is, okay, you had $10, you lost 20%, you have $8. If you gain 20%, you don't have $10 yet. You're still not at $10. You're at $9.60. See what I'm saying? Yeah. So you're not back. Yeah. So the bigger number, if you lose, it's based on the bigger number. If you gain, it's based on the smaller number. so kind of keep that in your mind. One other thing, and I don't know, I know that Brandon, you probably get this in your emails all the time, but for those of you that do a transaction, like right now, we're taking, people are sending in USDC for the equity in Libra. And one of the guys last night was like, hey, I sent it, but it said the transaction failed. Well, what MetaMask says doesn't necessarily mean that's what occurred on the Ethereum blockchain. You need to go look at the wallet on Etherscan, and that will tell you what actually occurred, because the transaction went through. I should have told him it didn't happen 25 times and just kept taking money, but
what?
Yeah, but no, so go to Etherscan. Whenever you're not sure what's going on, don't trust MetaMask. Don't trust any wallet. Go to the actual network's transaction checker, which is whether it's Basescan, Etherscan, whatever. Go and look at your wallet and look at the transactions, and you'll see if a transaction did or didn't go through. Source of truth. Go to the blockchain. Yay. Or in the case of Hedera, the distributed lattice, the directed acyclic graph structure, or whatever, spammy ass version of a network scanner they have.
That's right. Let's go. Do we want to talk about some of this news that kind of happened over the last couple of days?
There's
kind of a lot of it, right?
Well,
Kathy, is that Kathy Wood?
Kathy.
I listened to a podcast. She did like a little thing yesterday. I listened to it. It was pretty good.
So I'm guessing this was kind of part of what she said, but basically she says that the U.S. economy is in the last leg of what she calls a rolling recession. before massive productivity boost. Now, when you say the U.S. economy is in the last leg, is this a leg of a midget wrestler? Is this the leg of an NBA point guard? Oh, what kind of leg are we talking about? Because you could have a long leg, and I don't know that it. But anyway, I'll tell you what she says. I'm just not sure that being in the last leg of anything means anything. Like, is the last leg 3 more years or 6 more months? I don't know. But anyway, Kathy Wood is predicting that, and she's of ARK Investments. She used to be, was really smart. I think she's kind of like Janet Yellen, like in her 40s and 50s. She was pretty clever. But now she's kind of pushing 60s and a little bit, maybe less on the pulse. But she's predicting that recessionary pressures will soon end, setting the U.S. economy up for a massive economic boom in the second half of 2025. Are you ready for a massive boom, Brandon?
Yes.
I can't wait. I ate a bran muffin and had coffee, and I'm also waiting for a massive boom. So anyway, Wood tells her, and I don't know how she has 1.7 million anybody's that listen to what she has to say, but whatever. She tells her 1.7 million followers on X, Twitter, that the U.S. economy is currently experiencing the final stages of a rolling recession, setting the country up for a bullish phase. A rolling recession, which is, again, this made up shit. It's an economic term used to describe the phenomenon of different sectors of an economy experience contractions and recoveries at different times, preventing a full-blown recession. So basically what she's describing is economy. Like, Brandon,
the ebbs and flows of economy. Yeah.
This is going to be mind-blowing. Different parts of the economy experience contractions and recovery at different times. You're welcome. You're like, yeah, no shit. What were you going to tell me? So she chooses to call this, which is the normal. That's the norm. That's the way economies work. She chooses to label this as rolling recession. Whoa, we're rolling. Anyway, she said, in our view, the market today is discounting the last leg of a rolling recession, which will give the Trump administration and the Jerome Powell Fed many more degrees of freedom than investors expect, setting up the U.S. economy for a deflationary boom in the second half of the year. Okay. She also said during an interview with Pomp. His name's not Pomp. It's Pompliano, and he's a fucking idiot. And whenever the markets go into bear market, this dude disappears for years. Gone. You don't hear a fucking word out of him. Then, when the markets start to turn back up, Pompliano here. I'm Pomp. I'm here to talk about Bitcoin. Woo woo. Like, he's the other side of the douche particle. If it's like in the smallest douche particle, there's the Pomp particle and the BitBoy particle.
Okay. That's the atoms that make up. Okay.
Yes, that's the early universe.
Yes, got it.
There was just free floating Pomp and BitBoy particles, and then they came together to form the douche molecule.
Got it. Perfect.
That was the first one. Yep, that was the first one. The douche atom. Anyway. She also said during an interview with Pomp Investments founder Anthony Pompliano at the Bitcoin Investor Week in New York that if Congress adopts an expected tax cut plan, it could help reduce market uncertainty and unleash economic productivity. Okay.
That's true.
Yeah, that's a little tricky when you say that. Like, okay, if Congress adopts an expected tax cut plan. So
yeah, I see the word salad there a little bit.
Yeah.
I see what you're getting at.
Yeah, again,
it doesn't mean anything.
She says a bunch of nothing. right? Then if Congress adopts an expected tax cut plan, so there's nothing already.
It already is expected. Yeah,
It could
She
help
has
reduce market uncertainty.
she has a good publicist. She knows what she's doing.
She has said nothing.
Well,
And-
that's how she doesn't get tackled down on anything. If you
and
say
potentially-
something, yeah.
and potentially unleash economic productivity. Well, if it's 49% unproductive and 51% productive, I guess you unleashed economic productivity and you're 1% better. Like, what? She said, if we were taking your tax rates, if we said we're taking your tax rates down, choose a percentage, 3 percentage points, retroactive. If they did this very soon, to February 1st or March 1st, let's say, and they finished the negotiation that would take the uncertainty away, that would take that very important uncertainty away. And honestly, this is her going on. I think we will have a booming economy with much lower than expected inflation. Okay, wait a minute. Those two can't be true either. If you cut the tax rate, and her idea is by cutting the tax rate, people are going to go out and start buying shit. If people go out and start buying shit, that money that would have been going to taxes is being poured against a fixed number of products in the consumer economy. That's inflation, or at least that's an environment where inflation can breed. Remember, 10 eggs, $10, $1 an egg. 10 eggs, $20, $2 an egg. Like, so I'm not sure that she has worked through her own words. These people are the masters of saying nothing and then making it sound like it's something. She said, after we've been through this rolling recession, and now here's the last leg of it, where housing, autos, capital spending, small businesses were creamed, lower income creamed, finally, high income cracking. We're ready for massive productivity increase. But those two things don't make sense. Because someone's losing money or because they lost their job doesn't mean the next step is massive productivity increase. It's those are kind of non sequitur. So I guess I don't know what's going through her mind. When I first read this article, I was like, okay, I get it. Now I'm not so sure I do get it. I'm not sure I know what she's saying or what her assumption is. Maybe I got it wrong. Brandon, does a bad market mean that massive good times are coming? I mean, I guess eventually things would change, but one doesn't mean the other.
Yeah, it never has. It's like flipping a coin, right? Same thing. If you flip 50 times heads in a row, is it going to be tails next?
It's like, Brandon, you have pneumonia. Good news, you'll probably win the lottery. What?
Yeah. Too
How
unrelated.
Well, you have pneumonia, don't you? Yes. Well, then you'll win the lottery. It's pretty obvious. Pretty commonsensical. Okay, bro. So anyway, that's what we get from Kathy and Pomp. Productivity increases and a rising dollar are two of our biggest antidotes to inflation. And I think we're going to be shocked at how inflation goes. Again, not even a prediction. We're going to be shocked at how it goes. Come on, man. God. Anyway, whatever. Good. But it's funny because her contention was that artificial intelligence would be part of this. And I think that's true, but I don't think it's true anytime soon. I don't think AI unleashes any kind of massive nirvana anytime soon. I think it's still the promise. I do think we had the AI boom and then things kind of blew up a little bit where the markets are kind of repricing and starting to discount things like, okay, everybody won't be. So at first it was like, who's going to be the winner? Let's invest in everything. Everything went up. Then it was like, oh shit, I don't know if any of these guys are the winners, and everything sold down. And now they're thinking, wait, what if with this whole multi-agent thing, everybody's a winner? Oh shit. And so I think you're going to have a second kind of a reinvestment with what, people like, okay, we know the AI space now. We've been in it for a year and a half. We're all veterans now of AI. Now that we know the investments, now we can make competent investments. We're not just throwing our money at crap. That's not the way AI works. Some little lab in India can pop out some really cool stuff tomorrow morning, and everybody gets thrown into a deep seek type panic again. So I don't know, man, which is good for us because it means there's a lot of potential or like built up volatility. And I think if volatility is unleashed, you have a furtive trading environment. That's about the only prediction I can make. I don't know why Bitcoin's not $175,000 right now. It doesn't make any damn sense to me because regulatorily, this is the best it's ever been. We have a fucking strategic Bitcoin reserve. I think this gets lost on people. That's a big deal. And everybody's like, I don't know, man.
Yeah. They're focused too much on, they're focused too much on the tariffs. They're all getting fear. I think it has a lot of confluence with the ETFs now because the ETFs are part of the stock market. So a lot of the movement in Bitcoin's pulling out and the sales and stuff have been tied to the stock market because of that.
And when you get a bad, you guys know this, you don't even have to read tea leaves or be a TA guy. If you have a bad weekend in crypto, what do you think is going to happen on Monday when markets open? They're gonna sell the shit out of the ETF. It's got to play catch up.
Yep.
In the same way that if you have a good weekend, an all green weekend, what do you think is going to happen on Monday? Like, you don't have to have a degree in psychology to kind of get this. It's like they play catch up because they don't trade 24/7. So there's always going to be that. And if you have a red weekend and the market gets nuked on a Monday and the greater stock market's getting its ass kicked, then you're going to have, then it's going to go back. So you're going to have crypto blows up on the weekend. Then the ETFs get nuked on Monday. Then guess what happens? Oh, then crypto gets nuked again. Why? Oh, because the ETFs are getting nuked. People are reacting. It's the tail wagging the dog. People are reacting to the prior information after the fact. And this is like the Fed minutes thing all over again. There's the decision. People react to it. Then there's the information that Jerome's going to read. People react to it. Then he reads it. They react to it. Then they have a luncheon 3 days later. And he says the same thing he said 3 times. And people react to it. And then 2 weeks later, the minutes come out, which are what happened the last 4 fucking times that he got in front of a podium. And they react to it again. The same information. 5 fucking times because people are stupid. And the problem is, it doesn't seem to change. No matter how many times we say, so you got to wonder, maybe we're the stupid ones, Brandon. Maybe we're stupid. Maybe when we say, what would dummies do? Maybe we're the dummies.
Yeah, possibly.
Right? Because maybe we're dumb to think that other people are going to do anything more than just parrot out and mama bird the crap that they hear on CNBC. Like, there's no independent thinking. None.
Yeah, that might be the biggest flaw that we have for sure, because a lot of people are getting parroted the same stuff, the TA stuff, where they all assume that Bitcoin's got to go to 73,000. So everybody's just watching that level, and so they're waiting for that to happen. And because they're all saying it, it's like a self-fulfilling prophecy. That's the TA. That's the only TA benefit, is when everybody's saying the exact same thing, it might play out because everybody's waiting for the exact same thing to happen. So, and then everybody sets up their trading bots, buy at this level, sell at this level, so it's like, it's self-fulfilling on those fronts. And so people aren't actually thinking.
If enough people believe it.
Yeah, people aren't thinking about the reality of, we have a Bitcoin strategic reserve. Michael Saylor's going to buy another $21 billion of Bitcoin somehow. Rumble's buying Bitcoin right now. Semler Scientific's buying, I guess they're buying other things. But we got Mara buying Bitcoin. Everybody's accumulating Bitcoin right now. But then all these retail investors are like, well, we're scared because somebody on a chart said we're going to. So a lot of that's selling. And the reason they can move the charts and the whale purchases don't is because we're still in a low volume market. A $2 trillion, 1 trillion, whatever Bitcoin's asset is it's still super low compared to the reality of the bond market, of the stock market.
This is an incredibly illiquid. Well, we're still in the crypto is illiquid assets on illiquid exchanges traded by sketchy ass individuals and dummies. And also remember, There's now more dummies than ever because why? Because retail investors, and you know how they are, grandma with the 401k and all this kind of shit, they panic when the temperature goes down to 54 degrees from 58 at night. I mean, oh my God, we got to wrap the plants and bring the pets in. Like, people panic, and I get it. It's your retirement. You're not working anymore. You're not really generating income. You probably do panic. Like, people that don't have cash generation strategies, when they see their net worth of their investment portfolio, which is basically their their last kind of get out of jail free card, they see it going down, they panic. And that, I get that, but you have just net panic mentality in retail, period. And so I think that's what's moving decisions, right?
Well, yeah, I mean, I think, Jeff, this might be the issue. This might be the issue right here, right? And I think this is something that we completely ignored. The last time we heard from Cramer was on Bitcoin was January 27th. I own Bitcoin. You should own Bitcoin. Bitcoin is a great thing to have in your portfolio. January 27th. Let's go look. Shit. Bitcoin chart. Let's go back to January 20. Hold on. January 27th was right there. Okay, perfect. So
wishy-washy mofo. I mean, God, man.
Let's see how much we've lost since Cramer said that, and it's never been up since. Like, literally has not gone up since. We're down 23% on Bitcoin since he talked.
We need Cramer to call.
Yeah, we need Cramer to come out and be like, dude, this is topped. I'm selling all my Bitcoin. I'm done. I can't take it anymore. I've capitulated. Then we're good. That's it. Somebody please send him a message.
You know that Cramer doesn't manage money anymore. Well, obviously he doesn't manage money, but do you know that I think he's not even allowed to own the things that he talks about for the most part. I don't know how he gets away with it with Bitcoin. But
how does he say? Yeah, how does he say? You should own Bitcoin. I own.
Yeah, I own
Bitcoin. So either way, he just. So did he lie there? In which case, that's a regulatory problem.
What I heard, and maybe this is not right, but I heard they weren't allowed to own the assets they talk about because it creates perverse incentives. Yeah. But I don't know. I mean, I guess people just chalk it up to that's just Cramer being Cramer. And look, if you get your marching orders, Cramer's not wrong about everything. Like, if you look, he does. If you ever watch his show, he says some sensible things. We just kind of pick on him because he's low-hanging fruit for the kind of bad media that's out there that is more chart focused than reality focused. Like, there's a lot of guys looking at TA and no one's looking at the regulatory landscape. That should be the chart people are looking at.
Yeah. Well, yeah, I mean, look at regulatory landscape. Look at the reality of things. These are whale purchases, and you can see that it's picked up dramatically in the first quarter, but retail purchases are down. And you can see that too. Whale purchases have accumulated a big chunk of the Bitcoin on exchanges, but retail has been selling. And so that's the narrative that we need to be talking about here, not the.
What would be the line in the sand to sell Bitcoin? Well,
never.
I don't know that there's a line in the sand. If you believe in an asset, there is no line in the sand. I mean, the line in the sand occurs when the story changes. If the story changes materially, we don't know. Just something that we can't imagine happens, and then you say, "Well, the story's different now. I no longer believe in this asset in the reasons for which I purchased it." Then you have to reassess the asset. And that's any asset. The perfect example, Fetch. We loved it. Then there was the ASI murder. And then we didn't love it. And then we loved it less. And then there was a point where I was so fatigued of their bullshit that I was like, the information has changed so much that it's no longer even a trade for me. It's not an investment. It's not a trade. I want to be out. I don't want to own one fucking token because I don't want to support any of that craziness. But this isn't just with Fetch and ASI. This is with any asset in your portfolio. You might have a breakup, man. You know, your sweetheart in high school, something may happen. You may come home. She's got her OnlyFans running. You know, she's doing toe fetish stuff. You told her not to do it, whatever. The story has changed. It's time to cut loose. Cut it. It's over with. But you guys have to do that with every asset in your portfolio, which is another reason we tell you guys it might make sense to have less assets than more. If you're sitting on 25 different assets, you may want to scale it back a little bit just so that it's not mentally exhausting to manage this stuff. Can you imagine dating 8 women? Ooh. 7, 6, okay, but 8? That crosses a line, bro. That crosses a line.
And to add to this question, when does the broader acceptance of it as a currency begin? I don't think Bitcoin will ever be accepted as a currency.
It's not a currency.
That's maybe a misunderstanding there.
Yeah. Well, I mean, some people have said no, because like Samson Mao and all those guys, they all push the whole idea of the Bitcoinization, hyper Bitcoinization, where Bitcoin would be the underlying asset. But even then, what they mean is that it would be the reserve for which other things might be priced. I don't think that ever happens. That doesn't make sense to me. It seems like stable coins will be the crypto that things are priced in because they're related to, correlated to government issued assets, government issued currency units. I don't know that Bitcoin will ever be trusted. I mean, gold is not a currency. Gold is a money. Remember, anything that can be traded for goods or services or extinguish debt is a money. But gold isn't a currency. Gold needs to be converted to a currency. Bitcoin needs to be converted to a currency. Now, you may find people in any ecosystem that are willing to skip that step. And they say, yeah, well, I'll take Bitcoin directly. To me, that works. And in those specific cases, Green, you're right. It would have a currency function in those limited cases. Example, we made our down payment for the Rolls Royce it was actually in USDC. And then I made a subsequent down payment for another car in Ethereum. At that moment, Ethereum was treated for that moment as a currency for that one transaction, but all of it's money. But I don't know that would ever be accepted as the norm. Now, if you're saying, are there tiny pockets of acceptance as Bitcoin as a currency? Sure, because there's people that will trade you goods or services or extinguish debt for some Bitcoin. Brandon, you did it for some work on your car.
Heck yeah.
So in that moment, Bitcoin served a currency function.
And that guy is way up.
Probably not. He probably converted that stuff.
He probably did. So here
you should go talk to him.
I should figure it out. Here we go. So what do you think of this? So it looks like Abu Dhabi they did a $2 billion investment in Binance for a minority stake.
What?
I don't know what minority. Yeah, $2 billion. The payment's going to be made in stablecoin, which is good because that means they have to. It's not just a cash payment, so right. It creates more liquidity in the space. I like stablecoins growing because more liquidity is coming into the crypto space. What do you think of this? This is the biggest payment ever for anything in crypto. Ever.
And Tuesday, yesterday you were talking about paying taxes with Bitcoin. Well, no, I was talking about that would be an option for the government, a budget neutral strategy to raise Bitcoin, although it's indirectly not accurate because that tax that would have been paid with US dollars would have gone back into government coffers. If this money doesn't go into government coffers and instead gets redirected to a Bitcoin strategic reserve, it's a bit disingenuous. It's like it didn't cost the taxpayer, but it actually did.
You're still taking from the taxpayer.
Yeah, you're still taking from the taxpayer because that's money, that's tax money that's not going to offset deficit. And then because it's not going to offset deficit, you've got to sell more government securities via the Treasury by stealing from the future. So yes, and why not tires and eggs? In a world where everything transacts immediately, so in a world where you could go to the store and just use your MetaMask wallet to pay for something. Imagine this. You have your MetaMask, you just go in, that's your wallet. Your Web3 wallet is your wallet. I already pay with my phone everywhere anyway. I don't ever have to pull a real card out. So, but imagine that instead of it pinging my American Express black card, because I'm a fancy motherfucker, imagine that it pinged my MetaMask wallet. And what it did is it looked, and I set the variables for which different assets would be used to pay. If this asset has gone up in the last week, more than 5%, use it to pay for groceries. Like, that's my primary payment thing. Or I want to take 15% of my appreciating assets to use for payments and 85% of my dormant assets to use for payments. And I could set all that up in the background. And then when I swipe it, it just does it. And it instantly executes whatever tiny little sales it needs to facilitate a transaction into whatever asset or assets that the grocery store takes for my tires and eggs. Because I go to Costco where they have both. So yeah, that could happen. But again, that would be a this for that. They would still be eventually resolving that into a currency that they can use to pay their light bill, to pay their landlord, to pay their employees, to restock the shelves of more tires and eggs. You see what I'm saying? So it kind of resolves to the same place. It resolves back to whatever is the currency that has the most utility, for them to run their business. And in the future, you might be right. On the other side of the equation, they might be doing the same thing. Maybe at the grocery store, they're like, oh, well, we only want assets that have been performing this much, and your wallets just talk to each other and say, this is what you want, this is what I want, here's a transaction, but it still has to be equated in some currency that's a unit of account so that everybody can agree on something, agreement. And that's where currency was created in the first place, is so that we could have price agreement rather than have to do barter for everything. So, yeah. So there's that. Any updates? Yeah. Well, the update was I'll be able to go look at a mock-up if I go to England in October and see the actual car. I've seen sketches that were drawn by the designer. It's awesome. It's big. And the way that car prices are going up so fast, which doesn't make any sense, but like, car prices are ridiculous now. I mean, you have no idea. You have no idea how expensive cars are now. Well, maybe some of you do. Brandon, you know what the entry level Lamborghini is now? Just to get in the door. The cheapest Lamborghini. Before you put tires and a steering wheel and paint on it, $375,000.
Because those are all separate, apparently.
Temerario, $375K. That's the base, bro.
Wow.
Base.
Wow.
You can still get some base. You can still get into, for about $320,000, you can get an entry-level McLaren.
Nice.
For the paltry sum of $320K, you can get an entry-level McLaren. You know what it is to get any kind of real hypercar? You're at about 1.6 million before you even get started. And I think high-end cars, because rich people are still rich, are just going to keep going up. So by the time this Rolls-Royce drops in 2028, it'll probably be a $3.5 million car with $5 or $6 million in premium on top of it. So it'll probably be a $10 million car, because every other goddamn car will be $10 million bucks. A Porsche, a freaking Porsche, these Porsches, the 911 Turbo S with all the kind of fancy bullshit on it, are like $380,000. A Porsche, that should be like a $60,000 car. What the hell, man? Anyway, so it looks good for appreciation sake. Yeah. Okay. Joseph said, do we agree that the BTC market is being manipulated? No, I don't. I don't think it's manipulation. I mean, it's an illiquid asset on illiquid exchanges traded by sketchy, stupid individuals and dummies. And then there's a few people that have a lot of it. You don't have to be a genius like I have a lot of it. I have futures markets, and eventually I'll have options markets. So just sloshing around my big pile of coins, I can move those smaller markets and I can make money off of it, and it's not technically illegal. So that's not really manipulation. Technically, every time there's a buyer and a seller coming to an agreement on a price, I guess that's a little bit of manipulation. I think it's worth this. Yeah, cool. No one ever says manipulation when the price goes up. Brandon, do you ever hear people saying, this is manipulation? Well, except when Dogecoin went up.
True.
Because then everybody said,
SEC called him out.
Manipulating it. He's manipulating it. Elon Musk
People
never
sure loved it. They
Dogecoin.
sure loved it. That guy, I feel horrible for Elon. He's putting his neck out on the line. He's getting a lot of hate, that poor guy.
And that guy, if he pushes too hard with this Doge thing, someone's going to kill him.
Well, that's the fear, right? So, 100%. But it's like something that he didn't even have to do, but he's doing it. So that's why I feel bad. I don't know.
Bitcoin could be the currency for AI. I'm not against it. I'm not against that idea. I think stable coins are the currency. I think that's the currency for AI. I don't know why Bitcoin specifically. I'm not against it, but again, I think people should look at Bitcoin as a kind of an insurance policy. It's a hedge. It's not even the gold. It's not digital gold, although I know that's how it's pitched. I think it's digital default swaps. It's default swaps. If you get it right with Bitcoin, there's no limit. It can go to infinity because governments print to infinity. So I think in that environment, Bitcoin is the default swap against government behavior, against profligate behavior. Bitcoin is the default swaps. Interesting. All right. Let's see. You can make that argument about Sean. I did make that argument. I made that argument a few times yesterday. Every one of those examples. I agree. I was giving you examples of how it could be done on paper, but if you tease it out, there is no such thing as a budget neutral strategy. If you're selling something that would be going over here and redirecting it over there, it's still money that's not over here that ends up over there. And that creates a deficit over here and a surplus over there. So, yeah, yes, I agree. All right.
Yes.
Should we jump behind the wall and look at markets? Because we could do this all day.
We could do this all day. Well, the last thing that I wanted to mention was the bills that got proposed yesterday.
The House and Senate shenanigans.
Yeah, so Cynthia Loomis, she re-proposed, so it failed the first time, so she re-proposed it yesterday. She wants them to buy 1 million Bitcoin over 5 years. So this is different than the executive order. This is a whole different, this would be on top of, in addition to, she has support.
This would be what would feed into the strategic reserve, right?
Yeah, I don't know if, I think it would be two different baskets. This is a separate thing. This is, I don't know.
Wouldn't that Bitcoin be warehoused at the strategic reserve? They're not going to have this is the strategic reserve, and this is the Cynthia Loomis reserve.
Yeah, I think, it would have to be the same basket, maybe. I don't know how they're going to market this, whatever. This is better. This is a good thing. Well, the other one's great, too. I don't know why everybody's hating on it. Well, I don't know why everybody's not acting on it, I guess. The other one's great, too. It's actually, I think the people are just waiting for them to say, this is how we're going to buy more Bitcoin. This is it. That's all they're waiting for. So this got introduced in the Senate yesterday. There was also Nick Begich, who knows? Republican from he proposed the same plan in the House. So now we have both the House and the Senate with the same plan working simultaneously to get support. Now, each of these bills have a bunch of co-sponsors. Let's see. And a co-sponsor isn't a vote. A co-sponsor is better than a vote. So these people are actually working in tandem with Loomis and Begich to get this being passed. So they still have to go get all the support. And then I guess that's going to be a real uphill battle, so says Cynthia.
Unpopular opinion. I don't think it's going to make it.
No, I mean, no, that's not the that's the popular opinion.
Oh shit. Okay. Yeah.
Yeah,
Popular
that's
opinion.
that's the opinion of Cynthia as well, by the way.
Yeah.
She just said it. She's like, just so y'all know, we don't have a lot of support behind this right now.
Yeah. I
So,
just don't see.
yeah,
mean,
that's
We're too busy buying useless shit and sending money to countries where it's never coming back to do something that people would actually,
yeah, that's the reality of the situation. But I did want to mention they got reproposed. Yeah, and this was all Cynthia with people have learned to adjust expectations for Cynthia's posts now. They're like, she's like, big news coming Tuesday. They're like, yeah, sure, Cynthia.
Yeah,
and this was the big news. And so everybody's like, that's what we thought. That's exactly it.
Yeah,
Michael Saylor,
take the hat off. It's not
yes.
bad.
Yeah, I don't. Yeah, we'll see. Whatever. Anyway, let's go to markets.
Okay,
let's hit those up.
So we got to go behind the wall, and then we'll go behind the wall, and then we'll go look at markets because that's what we do. So we go behind the wall. So like boom, 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 and boom, and
Going behind the proverbial wall now to continue the broadcast privately for the digital investors and digital private clients. If you'd like to join us, simply go to nickblacknext.com and subscribe to one of our plans and immediately take advantage of our library of tools, tactics, and information. It's all designed to help you learn, grow, and manage your portfolio like a pro. Join us now.